There's not a PowerPoint for this. I did include in the packet, in the meeting materials, the 3 documents that we have on our website on for the chart of accounts. So there's the instructions that's up. There's a fund description table. And then just the whole chart of accounts funds table. So if you have those, you might want to get them out. I was able to present some of this at your North District meeting, but when we got to the South District meeting, there just wasn't time, so I didn't get to present any of it to them. And there are some people that are here that weren't at the North District meeting, so some of this, I apologize, will be a little bit repetitive because you have heard it before, but I want to make sure we're all on the same page for that. The 3 documents that you have in the meeting materials are also available online on our website on the county auditor's page. I will be updating these, so hopefully before July 1st I will have the newer versions. What you have in your packet is what is currently on the website, but there's going to be some changes to that. I just wanted to let you know about that, but you can always get them on the website if you want the most current version. And the 2 updates that we're going to do are really going to be to that second table on the fund description. I went through and corrected because somehow dropped the ball in the last couple years, and some of the code sites were not correct. Those codes have been repealed, and so I corrected those. And then we did add some new funds, and those are going to be on the new updated version. And like I said, we'll let you know when those are available, but I'll also post them on the website when that's done. So I'm going to start out by explaining why you even want a chart of accounts, which you do want a chart of accounts, and then why we established the standard chart of accounts that we are using. And one thing I did want to say, just to give you a heads up, this is going to be a fairly long process. But we are in the beginning stages of working on creating a standard chart of accounts that will incorporate not only your accounting funds, but your budgeting funds. So we are working with the LGF to try to get that changed. There's a lot involved in making that change, so it's not going to be overnight, but I know that's been a lot of concerns that you've got 2 separate fund tables or fund lists, and we are working on getting that changed, just so you know. But I mean, I'm talking a year or 2, because they're going to have to completely change their database, and so there's a lot involved in getting this incorporated into one standard, but we are working on that. So back to our why we need a chart of accounts. The accounting, at its most basic level, is an organization of data into a usable format that will meet your operational and management needs while also supporting your reporting requirements, both internal and external reports. To illustrate, let's say you are looking at 12 months of duplicate checks that your county issued in the past year. While I find that fascinating, they don't really provide you much summary data. The information is all there, but the summary data you're going to find in your annual financial report or in your funds ledger. It's just not as accessible with just that stack of checks, although again, the data is all there if you wanted to go through it, but it's going to be a much more time-consuming process. So if someone asks you, for example, how much was dispersed from the general fund on personal services last year, and you wanted an answer, going through 12 months of checks to pull out every one that might have been paid for that, it's going to take a lot longer than going to your fund report and looking at personal services as your classification of expense on your appropriation detail and giving that number. So the fund report, and then that leads into the annual report, organizes the same data in a much more accessible form. And that is the beauty of accounting and why we have accounting. And I just wanted to point out here that accountants are really not boring people. We just get really, really excited about boring topics. And so this is one of them. but it is really exciting in a way. So now that you've decided that you do need to organize your transactions, the next decision is how to do that. For governments and not-for-profits, fund accounting is the most common form of accounting, and the State Board of Accounts actually prescribes the use of fund accounting on the cash basis to provide accountability for governmental activities and financial status. We have issued the Accounting and Financial Regulation Manual for this basis of accounting and reporting. The manual is posted on our website under our manuals, and you will find a definition of a fund, and a fund is considered to be a separate accounting entity. The operations of each fund are accounted for with a separate set of self-balancing accounts that are comprised of receipts, disbursements, and its cash and investment balances. Resources are allocated to and accounted for in individual funds based on the purpose on which they are to be spent and the means by which the spending activities are controlled. So each fund is a separate accounting for specific revenues and the specific disbursements from those revenues. As you know, the counties receive revenues from various sources, including your taxes, grants, fines, fees for services, and et cetera. You could fill that all in. The county then provides services, and hopefully the most efficient and effective way possible with those revenues. When there are specific activities that need to be performed or certain objectives that need to be achieved within a framework of regulations or other restrictions, the fund is an excellent way to account for that. A chart of accounts is an organizational tool for the various funds that you established. So it is a tool that pulls all those funds together, and again, another level of organization. On I may just refer to this rather than try to find it. On page 3 of your instructions, it talks about the various funds. So the first fund is always the general operating fund. Everything that does not need a separate accounting runs through the general fund. To try and explain what does not need a separate accounting, a good example is to look at federal grants. Your federal grants have restrictions placed on the use of the grants and specific reporting requirements that are more efficiently met with the use of a separate fund that tracks the receipts, disbursements, and balances of that grant money. If you were to run the federal receipts and disbursements through your general fund or even just one federal fund, it's a much more difficult to separately identify the federal transactions that you need to report for the grant activity and make sure that you're in compliance with the grant agreement. So your general fund is a governmental fund, as it explains in here. Within the classification of government funds, we also have fund types that include special revenue funds, debt service funds, and capital project funds. Another classification besides the governmental is proprietary funds. Those include internal service funds, which is if you are a self-insurance, then you will have usually have an internal service fund to track for your self-insurance accounts. And enterprise funds, those are things like utility funds, which counties don't usually have, the enterprise funds. Within the classification of fiduciary funds, which is the next type, you have trust funds, pension trusts, and your agency funds. A common agency fund is your payroll withholding fund. So originally, each county would have established a chart of accounts and expanded that chart as needed as they had new funds. If you go to the Uniform Accounting Compliance Guide for County Auditors, which is your county manual, that needs to be updated, and we're working on that too. There was a framework for a chart of accounts under a manual system, and as technologies evolved, those manual systems were adapted to integrate with the software systems that were developed for financial transactions. So that worked. Then along came Gateway. The Gateway system, and we've talked both yesterday and today about this, it allows, it's a transparency portal. It allows your governmental transactions to be available to the public, not only your citizens, but in the state and throughout the states. Anyone that has an internet access then can get information. So whether it's a citizen or whether it's a educational facility or whether it's a regulatory, someone that's trying to determine policy, they all have access to this information on this website. In order for that to work, we need the reports to be as consistent as possible. And so what was developed at that time was a standard chart of accounts to allow as much consistency as possible between the different counties. So if someone is pulling up and looking at what this county is calling their general fund and what this county is calling the general fund, they can pretty much determine that is the same type of information for both of them. So what the standard chart of accounts does is allow for comparability of the financial information between the counties, and understanding, for the public to understand the purpose of the fund and compare the activity between the counties. The same thing when you expand to the special revenue funds. However, there's a lot more special revenue funds. So what we found before the standard chart of accounts is there could be a lot of different names and purposes. So, for example, your MVH fund could be called MVH, it could be called Road Fund, it could be called Highway Fund or County Highway Fund. There were a lot of different names out there for the same purpose. What the Uniform Chart of Accounts gives you is the framework to organize the funds in a way that is consistently applied in each county to the extent possible. When you map your county's chart of accounts within your financial system to Gateway, it standardizes the classifications of the fund. We also realize that every county does have unique funds, and those funds can't be standardized, but Gateway does allow, and the chart of accounts does allow for unique funds to be incorporated into the system. Okay. On page 1, if we go back up to the, oh, never mind. Page 1 of that instruction, the standard charts of accounts has organizational areas that group the funds by the general purpose of the funds. So within that organization, we have statutory funds, local authority funds, accounting funds, settlement funds, remittance funds, federal grants, state grants, and outside funds. And those are used on your annual financial report only. Those are the ones that are not on your funds ledger but get pulled in before you do your annual financial report. And in addition, then, for each organizational area, we've assigned a range of fund numbers to be used. So if you were looking at your funds table, it starts with your statutory funds, and those are the 1,000. 1,000 is your general fund, and then follows through. And then starting at 4,000, those are your local authority. Those are those unique funds that are unique to your county, and your home rule funds. Then your accounting funds start at 5,000. Again, your accounting funds are clearing funds, like our agency funds, like your payroll withholding. Your settlement funds start at 6,000. Remittance funds start at 7,000. Your federal grants start at 8,000. Your state and local grants start at 9,000. And then the outside funds start with 0,001. Okay. Within this table, there is also a structure for sub-accounts. Sub-accounts are not funds, but they're further subdivisions within the fund. I think the most common example would be within the general fund to use sub-accounts to separately account for departmental expenses, and that's a way that a sub-account rolls up into that fund, but it separately identifies expenditures by departments. So the regulatory manual goes on to state that the purpose of the funds, and purpose is a very important phrase in all of this, the purpose of the funds maintained by a governmental entity is established from various sources and depends on the individual fund. Knowing the purpose of the fund is very key to understanding fund accounting itself. The purpose of the statutory funds are established or supported by state statute. When you go to the last table, which is fund descriptions, this form lists the statutory funds by fund number, and then it lists the fund name, and then in the third column, it lists the statute that establishes or supports that fund. So if you want to know what the purpose of that fund is, or where the revenue comes from, or what's allowed to be spent from the fund, you go to your chart of accounts on that fund account descriptions, go down to find your fund, then next to it there is the statutory. You can go straight to the statute and find out what to do with that fund. That's part of what I'm updating because some of them are not the most current, but I will get that corrected for you. So these funds are restricted by statute to specific uses. They do not revert back to the general fund at the end of the year. They stay as a separate dedicated fund. And one of the compliance items that we audit for when we are coming out to do your audit is that the sources and uses of the fund during the audit period would limit to those authorized by the enabling statute or your local ordinance, resolution, or your grant agreement. So please, and I think Fred kind of alluded to this earlier, try to stay within the chart of accounts when you're establishing these funds. Do not use numbers from the 1,000 to 3,000 for anything that's not already in the chart of accounts. Those are the ones that are statutory funds, and we give you those numbers. They should only be used for the specific purpose that is in there, so don't rename them or repurpose them. Keep them pretty much true, and again, that keeps that comparability between counties for that kind of information. On the flip side of that, again, we really appreciate it if you don't set up a home rule fund to do something that there is already a statutory fund established to do. And if you have a question about it or you're not sure whether it fits, call us. We'd be glad to talk to you at any time about it and determine whether it's best to establish a home rule or to use one of the statutory funds. We would rather have you call that than find out that we go into the audit and find out that the funds are not being used the way we expect them to be used. So it's, again, and I can't emphasize this, and I guess I said like Fred emphasized this early, not only do does the public use this, other counties use this, but also other agencies. When Auditor of State asks us what does this fund do, we're giving them what we think the statutory explanation is, that if it's changed for a county because they've repurposed that fund to something else, then information is not being communicated correctly. So and this is really a big part of what that gateway and that transparency is to get all of this consistent, to get it used consistently so we can make efficient use of the information and changes that make sure that everything is done equitably throughout. So the next series of numbers are for your local authority funds. There are some funds already in the chart that are kind of common that we've kind of put in there because they are amongst, there are several counties that use it, so we've actually put those in. So those are in the 4,000 to 4,019. And then we set up 4,100 for donation funds. Within that, you're going to name it for your specific donation, but you can set up as many funds as you have specific donations to account for. The 4,200 starts your local ordinance violation or county fines, and again, you can set up as many of those as you need that you've set up an ordinance for. 4,300, 4,400, and 4,500 are used to establish your funds for your redevelopment commission. As I said earlier, those do have to be separately accounted for. So there's operating funds, debt service, and capital projects. The 4,600 is your county debt service funds for the repayment of any county debt issued. 4,700 is used for your self-insurance funds to account for the transactions related to your self-insurance payments, the money that's going in there that's being pulled from withholdings that your employer match, and then claims or payments to your third-party administrator come out of that fund. 4,800 are for specific capital projects, and again, you're going to set one up for each individual project based on what's unique to your county, what your need is for that. So it's going to have a very descriptive name like, courthouse renovation project or new jail project. The 4,900 to 4,999 we left to be used by the county for any unique home rule fund. So if you're establishing a home rule that's totally unique by ordinance to your county, or that's the series you're going to use for those. It's the 4,900 to 4,999. I think it would be a good idea that for all of those funds that you set up a chart very similar to what we're showing up here for the statutory and list the actual enabling ordinance that set up that fund. It's going to be a great tool for you to use while you're in office. It's a great legacy for any of your successor auditors, because if 5 years down the road, it's going to tell you what ordinance to look at to find out what that fund was established for. We sometimes get questions like for dormant funds, what do we do with the money? If it's in that $4,900 to $4,999, we can't really give you an answer because we don't know what it was set up for. But your ordinance tells you what it was set up for and hopefully what to do with any remaining balance. And if it's not, then that needs to be addressed. You might need to modify your ordinance for that. But knowing where to find that 5 or 6 or 10 years down the road is really going to be helpful. So I would recommend that you do a chart similar to that and put your, instead in that third column, put your actual, the number of your ordinance or the name of your ordinance. And I did talk a little bit, but we do say, I have had a lot of questions in the last couple of years where people talk to me, whether it's from the auditor's office or even the council, on funds that don't seem to have any activity for the last few years. And you should be on top of your funds. You should know which ones are being actively used. And if they are dormant, they have not been used, it's a good idea to figure out what they were set up, intended to do, what you can do with that balance, and get that money back into a fund that you're actually going to disperse from, get that back into play. Otherwise, that money is sitting there and it's not being used, and it's available to be used if you've got it properly accounted for. Okay, and going to skip on the accounting funds for a second and move on to the grant funds. So those are towards the back of your funds chart. The chart of accounts assigns the 8,000 series to federal grants and the 9,000 series to the state and local grants. We've given the Title 4D funds in the federal grant area, as these funds are common to most, if not all, counties, so we go ahead and set up a fund number, but the rest of them are available to use as you get a specific grant. So you use the federal grant and the state and local grant funds to account for the receipt and disbursements for a specifically identified grant. Keeping the receipts and disbursements in a separate funds allows for better oversight for compliance with grant requirements and allows for easier reporting of grant activity. All of your federal grants need to be included on your schedule of federal expenditures or your CFA, and that is why the federal grants are kept separate from the state and local grants, so you can more easily determine if you've captured all of those federal grants and included them on your CFA, or actually the grant schedule that you put in the gateway that becomes your CFA. Each federal grant should include the CFDA number. CFDA starts for the Catalog of Federal Domestic Assistance, and it should be part of the grant. It should be, I know it's not always, but it should be part of your grant agreement, your remittance payments. They should be using that frequently. And then also, in the title, what grant or what particular project you're using that grant for. And having that CFDA number as part of your title does help you when you're compiling that grant schedule. For state grants, to have a matching requirement, and this, again, that local road and bridge grant fund that's new is one that you have to match dollar for dollar. So that's a state grant that's going to have a matching requirement. You should set up a separate fund within the state grants that you have not used. That's that 9,000 series. The grant money from the state and the local match from the county should be deposited to that fund. The grant fund would only be used for the specific purpose of the grant or the project that's been approved for that local road and bridge grant. Even if you're pulling the money, again, we talked about the sources. If you're pulling the money from your excise, stir and wheel tax, the special distribution of your LOAT money that's in the 1229 fund, or money from your rainy day, transfer your matching portion into that grant fund and pull the grant in when it comes in, deposit the grant into that. So you've got both sets of dollars in there to work on that project. There is, in the Uniform Accounting and Guidelines Manual for County Auditors on page 611, there's information on details on setting up these grant funds, state grant funds, and using that, especially when there's a matching component. As I said earlier, we will not take exception to the use of the motor vehicle highway, local road or street, or major moves funds being used to meet the matching requirement in 2016. This is predicated on the new legislation that they're putting, the technical correction they're putting in for 2017. We have not changed our permission on transfers, or our position on transfers to the rainy day fund from MVH and local road and street. And so there was a lot that thought maybe we could move from MVH or local road street to rainy day to meet that statutory requirement for the matching grant. We are not changing our position. You cannot transfer from MVH or local road and street to rainy day. So you need to, we're not going to take exception if you use that money to meet the grant, but it doesn't run through the rainy day fund. Okay. So all the funds we've discussed to this point are county funds, in that these represent truly county money. This is money that is available for the county to spend on county expenses, county claims, county operational expenses. There are funds, and you guys have more funds than anybody, to use to account for money that you receive as an agent for someone else, for another government, or another unit, money that's held in trust for another entity, other than the county. And I know I get a lot of questions from citizens, and they look at the bottom line on your annual financial report and they say, this is how much money we have. No, that's not how much money the county has, because some of that money is not county money yet. It's property tax collections. It's, it's in your after-tax settlements. It's clerk's trust money. It's not all available for the county to spend. All of it under the current regulatory comes down to a bottom line, and they think that's all county money. So I want to make sure that we're all clear on that you do have funds that are not money, or not funds that you can spend for county expenses. And those, but you still have the fiduciary responsibility to account for those funds and track those funds. And that's why we set up in the chart of accounts a separate set of funds to do that. So I'll start with the accounting funds in the 5,000 series, and those are payroll withholdings. I think those are the simplest to understand. So when you're going through your payroll, you're withholding federal withholdings, state withholdings. You might even have garnishments for several reasons. You have premiums that you're withholding to pay for health insurance benefits. All of that money is being withheld from your employee's tax, or from their employee's paycheck, but it's not your money. You're holding it until you remit it to the federal government, to the IRS, to the Department of Revenue, to Anthem or Blue Cross or whoever has your health insurance, or even to the clerk if it's a child support garnishment. So that money is kept separately in those 5,000 series. We have set them up, and you can add if you have additional or unique withholding accounts. All of those should roll up, which by that, when you get to your annual financial report, you'll actually have one total amount for payroll withholding, which all of those will then pull up into. And so if you chart that, it should go into one withholding fund for the report, but you still have your detail fund, so you know what is in that. Those are clearing accounts, so every dollar that goes in there should be dispersed somewhere. There are going to be balances in that depending on your timing issues. Some of it clears out right away. Each payroll you send off your federal or your state. Some you might hold for a month before you remit to your insurance provider or to the clerk for a garnishment or something like that. But at any given point in time, you should be able to look at the balances in those withholding funds and know what that represents. And so if you've got money you cannot identify, then that's something you need to get cleared out. It should only be holding the money that's in there that's been withheld for a specific purpose until it's remitted for that purpose. Okay. So then you come into the settlement funds, which are the 6,000 series. These are also a type of accounting fund. So as your the biggest part of these, as your property taxes come in, those are held on the treasurer's cash book until you're coming through settlement. And then when you're actually doing settlement, those are quieted into your settlement funds. And again, that is a clearing account. Everything that comes in should then be remitted out. Now, there are going to be timing issues on some of those, as Fred talked about earlier, where there might be in your property tax relief funds, they might leave a 2% balance that's going to roll over to next time. The problem that we've run into, I've noticed in audit reports in the last couple of years, is sometimes we are, for example, within that property tax relief fund, we're also keeping the county's allocation of certified shares or part of their Cadget or COET or whatever, and they're spending for they're actually posting claims to that within the settlement fund. And so the settlement fund itself is no longer truly a clearing account. It's holding county money and this agency money. And, you know, if you would, the problem is if you call up and you say, well, we don't know what to do with this money, our immediate response is, well, it's not your money. But in that situation, some of it really was, because it was put in there and not properly moved to one of the statutory funds or a local home rule fund or wherever for the county to use. So it's very important that those settlement funds only be used for money you're holding to get you through settlement. And again, I understand there's going to be balances in some of it. For the most part, other than timing issues, those should clear out. There should not be large balances in there, other than I think that stabilization fund can hold some money. So the remittance funds, which is the 7,000 series, are kind of like that 6,000 series. They just have more activity monthly. These are also agency funds. These are holding revenues that you've collected at the county level that are going to be distributed on either to the Auditor of State, the Department of Revenue, or other local governmental units. The most recent one was that special Lowit distribution. We said put it in the 7315, and that's where it would be held until you distributed it based on the allocation that was allowed to all of the taxing units that were to receive that money. So again, just as with the settlement funds, there should be no county operating expenses be distributed from these funds. They should be used as clearing. The money comes in and it goes out to the appropriate agencies who are entitled to receive that. The final series of numbers are the outside funds for the annual report. So these funds are not on your county ledger, but you do have to pull them in for your annual financial report. And so the chart of accounts gives you a series of numbers to use so that you can get those numbers pulled in. And these are the ones that you have to ask for a supplemental financial report form from the various departments. So for example, the treasurer's after settlement collection, the clerk's trust fund, the jail commissary fund, the inmate trust fund, they all represent money being held by the county that is not maintained on your county's funds ledger, but it is money that you are required to account for. So that money has to get shown up on your annual financial report, even though it's not county money per se, but it is money that you have a fiduciary responsibility for. There is one, I think it's the 001, but there is one on there for the recorders. It is still on the chart of accounts. However, we made a decision later that your recorder money all flows through the county at some point, so the only thing they're going to have at December 31st is if they have not written that check before the end of the year for the December collections. That money does not have to be on the annual financial report. You do not need a supplemental report from your recorder's office. And I told the recorders this year that they did not have to fill out that supplemental report, so I'm telling you the same thing. They don't have to report their annual activity because all of it does eventually flow through the county. Okay, so this is just an overview. Again, there's a lot of information in these three documents, and again, they're always available on our website. There's some additional information I wanted to discuss today. The first thing, as I stated earlier, I'm working on updating these forms, and I hope to have those out before the 1st of July. Local income taxes, we've already spoken on that in several presentations. The first thing I want to talk about is in July of 2012, State Board of Accounts issued a joint memo with the Department of Local Government Finance on the use of the fund, the 1110, which is Cadget certified shares, and 1121, which is COET county distributive shares. And we had advised counties that they should post their COIT and CAGIT into these funds and not commingle their income tax with their property tax. This was based on the idea that the separate sources of revenue should be separately tracked for decision making and in accordance with fund accounting. As we have learned, this did not work out so well for counties over the years. And the State Board of Accounts was asked earlier this year to reconsider this position, especially with the change now. You're not going to have CAGIT and COIT, you're just going to have certified shares coming in under the local income tax, so it seemed like a good time to make a change. So, starting in January 1st, 2017, we are not requiring that your distributed shares or your certified shares be kept separate. They will be posted to your general fund. They will be included in your general fund budget. We will be issuing a new memo, putting this all in writing so you have it hopefully before the end of the month, well, end of next month, letting you know about this. But it's rather than have to have two separate funds going, it's just going to be a source of revenue to your general fund, and it'll be included in your appropriations, then will be included in your general fund budget for this revenue. Yes, the certified shares or distributed shares, it will be local income tax certified shares is what the new tating, and that will be put in, it's formerly COIT and CAGIT, okay? So, for example, your CEDIT, your economic development will still be kept separately, that has a specific purpose. Your public safety, local income tax, which used to be LOIT public safety, still will have a separate and will be kept separate. If your county has a special purpose LOIT that was passed for jails or what, I know there's a whole slew of them, those continue to be separate funds. They are a separate purpose. This is just the certified shares that can be used on any county purpose. They really can be used the same way the general fund is, and those will be included in your general fund. As we're looking at establishing new funds for local income tax as new local income tax, that special legislation that can be approved in the future, we are going to keep the existing CAGIT, COIT, CEDIT special legislation funds that you've had, so you keep the history. So if you have a special purpose LOIT, you will continue to use that fund. We will set up a new fund for local income tax, so if your county does not have or establishes a new rate for a new special purpose, we want to transition to this new fund, the local income tax fund. And eventually those old ones, as those special projects are completed, those funds will be retired. But until they are done, so that you can keep your history, we're going to keep those on the chart of accounts. Yes?
Back to the general fund?
I think we will, I am not 100% sure, and I'm going to get that clarified before I send out the new memo. The balance that's left in December 31st, if you have a balance in your CAGIT or COIT certified shares, distributive shares fund, what you can do with that. I think we will probably not take exception. I'm not 100% sure. I'll get clarification that we won't take exception if you determine to spend it out of that fund until it's gone, depending on what the balance is, or if you choose to transfer it back into the general fund, whatever's easier for you at that point. It's just when you're making your general fund budget for 2017, you're going to put your revenues in with your other general fund incomes on that.
Since we're already in the budget process in Hancock County, and they're turning in their Form 1s with their CAGIT number on there, and we can't change anything till January 1, what's that going to do to our process? Because we upload our budget into Gateway. So are we allowed to go ahead and change those numbers to our general fund? Because every department, with the exception of 4, is in our CAGIT that we switched 2 years ago.
From an auditing point of view, yes, you can move it over. Now, how that works in the functionality of Gateway, I'm not sure, but yes, you
Well,
can
it
move
will upload as a Cadget fund into Gateway and a different fund number. It won't upload to general fund, it'll upload to a Cadget fund.
Well, it needs to be moved, so it would be in the
So
general
we could go
fund.
ahead and make that change early
Yes.
on for budget purposes.
As early as possible, yes.
Okay.
Okay, and I guess I was talking about, we're going to establish some new funds for the local income tax as it is, but we're not going to eliminate the old funds, so you can continue to use those funds, and the history for that project will remain. Seed it, which is your county economic development income tax, will still be economic development income tax. It'll just be under the new, there's a specific rate for that under your new local income tax economic development. Public safety will be your public safety local income tax. We did establish the new fund, 1229, for the Lowett Special Distribution this spring, and it will remain until the balance in the fund becomes zero. There's no time limit on spending those funds, so they can carry over into future years as that fund is dispersed. So as it approaches zero, then that fund will be retired at a later date. And then the settlement funds, there are several, again, Fred also touched on this today. There are several funds established for property tax relief that are funded by the different Lowetts. There is going to be one local income tax property relief starting in 2017 with the streamlining of that. We are going to establish new funds for that to come in as a local income tax property relief. We are not going to eliminate the old funds in case there are balances that exist at 12/31/2016. If you have balances in those, and we're going to have to determine going forward how we're going to get those worked in to settlement so that those eventually get zeroed out and those funds would be retired. So in the remittance funds, we do have Cadget distribution, Seeded distribution, COET distribution, and those will transition to just local income tax, certified shares, and economic development income tax distribution. Last year we added the fund 1228 for property tax assessment appeals, and we talked about that earlier in the new legislation about using those funds. And now we're going to add some additional funds that will be used for 2016. The first one is that 1229 fund for the Lowett Special Distribution. We're getting these added to Gateway so that when you put your annual financial report for 2016, these will be available. We added, and these don't affect all of you, but there is going to be a new fund, 1230. This is infraction judgment fines for Marion County. 1231, which is toll road infraction judgments for Clark County only, so that those funds are available because statute does require a separate fund for those. And then we are going to add 1232 for law enforcement recordings copy fee. I talked about that early today. Again, that fund may be spent without appropriation for expenses related to the law enforcement recordings. We discussed the whole details of that earlier today, but that will also be added as a new fund. We did add in the settlement funds 6030, which will show up in the new chart of accounts. That's for abatement, deduction, repayments. So if you receive either voluntarily or because they are the legislative body for whoever allowed the abatement determines that they have to repay some of that. They've not complied with the abatement requirements, and so they have to repay it. It allows you to put that in that fund, and then so that you can determine how to distribute that back out to the taxing units. That would be, I'm not going to answer that. It's probably part of settlement, but you probably want to check with Fred and with Ryan on how to handle that if you get a abatement repayment. And we did add the fund 7315 as remittance fund to account for the total special distribution of Lowit this spring. Again, that was kind of an in and out fund. By June 1st, that should have zeroed out because you've remitted everything to the appropriate, including the county, the appropriate taxing or political subdivisions that are entitled to an allocation. There's going to be in future years, because they did lower, which Courtney talked about in her Lowit or lit presentation. There's probably going to be more often be special distributions because they lowered the amount that has to be held in the trust fund to 15%. So that's going to trigger a special distribution more often than it did in the past. And I believe, if I understand correctly, that the portion of that it will be designated for property tax relief. The counties will not have to use that in the first year it's received. They can defer that over 3 years to try to equalize the effect of that on their taxpayers. And so that is going to require special funds, because you're going to have layers. You're going to have different years that you might receive it, and to keep it within the 3 years of the original distribution. So those will not be right away, but those will be coming also as special distributions are released. We'll put in some new funds for that so you can track them over the 3 years. Okay, within the statutory funds, there is the user fee fund. That is used to account for user fees collected by the clerk and remitted to the county auditor. We established the 2500 fund as a user fee fund, but we left 2501 to 2599 to allow for accounting for each program that receives a user fee. The intent is that on the annual report, the 2501 to 2599 series would then roll up into one user fee fund that's reported as a 2500 fund on the annual financial report. But the sub-funds, those are separate funds, but we're treating them as a subcategory of the user fee fund, so that you can track the receipts, disbursements, and balances for each particular program, because those balances do carry forward from year to year. So the statute gives specific user fees that are deposited to the county user fee fund, which are pretrial diversion program fee, informal adjustment program fee, the marijuana eradication program fee, the alcohol and drug services program fee, the law enforcement continuing education fee, the deferral program fee, the jury fee, and problem-solving court fee and drug court fee. And these are collected by the clerk, probably, or possibly the probation department. So when you receive, basically when you receive claims submitted to the county auditor for one of these programs, for which these fees have been deposited in their specific program fee under the county user fee fund, then the county council appropriates from the fee fund to that program to pay those program costs. It has been our position, the State Board of Accounts, that each county has the option to either operate each program as a separate department within the user fee fund, or they can transfer the funds to separate funds established for each program, whatever's easier for you. Claims from the Sheriff's Department for their law enforcement continuing education tickets, or the $4 fee, those should be paid to the county law enforcement continuing education fund out of the user fee fund. I think there's been some confusion because of community corrections, and I want to go over that a little bit next. We have two funds on the standard chart of accounts for the community corrections. Fund 1122, which is called Community Corrections, and Fund 1123, which is called the Community Transition Program. I have been in communication with the Department of Corrections on this Community Corrections Program. I'm trying to get some information, and I'm working very hard to try to get someone to speak to you at an upcoming conference on these programs. But what I have learned is there should be three funds for community corrections: that grant fund, which we have 1122, the Community Transition Program Fund, which was the 1123, and there should be a Community Corrections Project Income Fund that the statute calls a Home Detention Fund. I am not sure why we don't have that in the chart of accounts under statutory funds. It probably should be there. The question now, and I would like some feedback on that, is that probably most of you have set up a home rule fund to account for this, and I don't want to mess that up. So I'm not sure adding it at this point. You've got your history in that fund. It's operating properly. Not technically correct, but that's our fault, not yours. So unless, again, it's under consideration, so I would appreciate some feedback whether you'd want that as a statutory fund for new. They are adding, community corrections are adding, working with probation departments, and so there's going to be some question, I think, that we're trying to work out on how funds collected by the probation department for community correction fees and how those are going to be accounted for. But at the present time, there should be 3 funds. The 2 are in the statutory, and the 1 is probably a home-ruled fund. Okay, and I talked this morning about it. I want to make sure there are any questions on the motor vehicle surtax and wheel tax. Those taxes are currently posted to your motor vehicle highway fund because the uses of the surtax and the wheel tax are pretty much the same. So we've always traditionally just posted them, had you post them to the MVH fund. The new legislation kind of, hopefully the technical correction will take care of it. It kind of brought up an issue because it was the increases, according to the statute right now, the increases in the surtax and the wheel tax that can be used for your local match, and tracking that separately within the MVH fund would have been probably an issue. However, since we're looking at the technical corrections and we're hoping that's going through, and we are allowing you to use any of the funds we will not take audit exception to any of the funds in the MVH fund being used to meet that grant. I don't think the tracking is an issue right now. If the technical correction does not go through, then we're going to have to address that next year and work out a way to track the increased revenue as opposed to just the revenue that you had received up to that point.